Hello, everyone. Welcome to our weekly ramp up. Actually, it's more or less some kind of an aftermath to what happened yesterday, and in general to discuss the volatility that we have seen this week, and that is expected, and something that is expected actually to continue, especially as we're moving into as we have in front of us still the Bank of England and the ECB. But before I start, I would like to share with you would like because now we had a pretty busy calendar. I would like to check together the US data. So we have uh, plenty released just now. So I'm sharing with you the economic calendar, the hot forex economic calendar. Okay, to see the data together. So I cannot see anyone live yet, but I can see that there are people here. So guys, this is your session, as we keep saying with Stuart, your session, waiting for your questions. I will be really, really glad to reply to any questions that you have. But okay, we had, as I said, plenty of data being released just now. Jobless claims, GDP for the fourth quarter, a preliminary reading though. PC preliminary as well, durable goods, but I will stick a bit on the durable goods. So what we are seeing over here is a missed on durable goods. So 0.9% contraction, so negative. It was expected to be less, but it came slightly, actually, it came nearly double of what was expected. So negative reading, and it might be actually the very first negative sign that we have seen for the last few months now for the US economy. So a slowdown in the in the durable goods. But on the flip side, we still see growth of the U.S. economy. So that's a bit of a mixed picture over here. So for the fourth quarter, even though a preliminary number, we have seen a growth of the economy, of the U.S. economy, with a headline at 6.9%. So that's the annualized index. So well above of what was expected. So it was expected at 5.5, 6.9%, and the quarterly reading came at 7%. So the continuation, the growth of the US economy remains intact, okay? However, the durables came a bit lower. So, okay, it's just durables is a monthly reading, was for December. It seems that the Omicron variant affected, maybe in geopolitics as well, but it seems that they affected the durable goods in December. That's why we're seeing this contradiction. But everything else remains in line with the growth of the U.S. economy, as you can see. Personal consumption came in line with expectations. The jobless claims also for 247K. So let me check that, 260. So in line with expectation, the a slight a revision higher for the last month, for the last week's reading, but not significantly. So not really something that worries us over here in the jobs in the job section of the United States. So we should really focus on the fact that it's still posting, US economy is still posting a growth, even though it seems that the Omicron has affected the durable goods in December. So that was it for in regards to the data. So let's quickly, hi trader from Thailand. Hi, hi future. Hi, welcome guys. For some reason, I cannot really share your emoji, dear camel. I don't know why, but it doesn't let me share your emoji. It looks of victory you're saying. Okay, analyze please gold, pound, dollar, cat, and of course. Okay. even though I would really like to discuss a bit together the what happened yesterday. But okay, I'm gonna start with the dollar, and I'm gonna explain at the same time, because uh, the Fed, the Fed yesterday, it was key, of course, along with the geopolitics as well. So everything that we are seeing today and everything that we will see for the rest of the week and maybe the rest of the year, it had to do with a more hawkish Fed. Even though Fed didn't really surprise, but let's start with the dollar index. So okay, here we are. It's at record highs. If I'm not mistaken, it broken them. So, oh, here we are. Dollar index at 97 territory. It's 97 at 20 to be more precise. Okay, and this is something that it hasn't have to do all with the data, but it's something that we have seen since yesterday night on the Fed's announcement. So guys, that's why I would like really to spend few more minutes explaining what happened yesterday, because this is what we are seeing right now. Okay, so the data boosted that positive bias even more. Okay, but it's not solely the data, it's the fact that the markets are still focused on the Fed and what is expected about the Fed. So we have seen since yesterday, actually, since yesterday, the dollar getting stronger and stronger and stronger. Actually, right now, if I'm not mistaken, it has hit it. It should be back to 2020 highs. Let me just zoom out. This is I'm putting just temporarily the monthly chart just to check where is it standing, and indeed I'm right. So this is these are the levels seen back on July July 7th, July 2020. So it has rebounded all the losses that we have seen since May 2020, one of the strongest currencies. And why this happened? And actually, the sentiment is expected to continue pushing the dollar higher in the medium and long term. Why? Because of the Fed. This is a daily chart. This is what we have seen so far today. This is a gap. You see that it gapped up on the open today. This was yesterday's candle, big candle as well, right? So look at that. Refreshing this boost that we have seen since the beginning of the year. And why is that? This is because it has found more strength. It has been powered by the bets that the Fed could deliver faster and larger interest rate hikes in the coming months. And we are referring to March. It will be the very first time. So yesterday, Fed and Mr. Powell might haven't been a surprise for us, but the fact that he indeed confirmed that, guys, we're gonna hike on March, and if we and after we hike for the first time, we're gonna proceed with further hikes through the year. So the fact that he actually, with his comments, confirmed to the markets, to us, that indeed we're gonna have a lift off on March, but not only that, we're gonna have more in the year. That's why we have seen this boost of dollar, because theoretically, strong economy, interest rate hikes suggest an appreciation of the currency of the country, right? Okay, this is the theory, and we can actually see that the market's pricing in on those 3 or 4 rate hikes that we're gonna see through the year. So they are already pricing in on that perspective. Okay, so the Fed clearly yesterday flagged that it is ready to start lifting rates in March to control, to contain inflation. Can you see my chart? I'm not sure. I guess you can. Cool. Guys, I want you to let me know whether you understand what I'm talking about in regards to the politics, in regards to the fundamentals, what I explained about the Fed and the dollar. Okay, let me know. We seem to have lost sound. Oh, can you all confirm that you can hear me, guys? Because apparently, Future has lost my microphone. He's saying, but I can see that it's still working and it's right next to me. I can see that it captures sound. Let me know if you're facing any sound issues. So, as I was telling you, I want you to let me know whether you understand what I'm explaining about the Fed and that the markets are pricing in. So they are trading. Perfect. Thank you, Emma. Thank you, Adi. Now, welcome, Adi. This is our dearest analyst, is a colleague of mine. Welcome in Indonesia. So welcome. So as I was telling you guys, yeah, clearing markets are pricing in. So pricing in the ex the rate hikes for March and for the rest of the year. So probably when this actually happens, we might not see a similar reaction, but it is what it is, right? So let's go with the flow. So as I was telling you, yeah, we have seen it's 97.20. I will shift quickly to the 1 hour chart because I know that you prefer the 1 hour chart and you are intraday traders, and most of you at least. So you can see that it doesn't run out of steam. This rally hasn't run out of steam yet. So MACD keep extending higher. Fast moving average are keep pointing higher. RSI, where's my RSI here? So in order to see it, no, you can see it, okay. It's here. Let me, if I just fix a bit. Yeah, now you can see it a bit better. Yeah, much better. So you see, RSI doesn't lose its steam either, even though it's in the overbought territory. It's still pointing higher. It's at 89, but doesn't really flip lower. We cannot really see it pointing lower. So that's a sign that there is further steam. The same stands for the stochastic, which is my short term, sorry. Indicator, momentum indicator. You can see that okay, it has some corrections. It had in the morning, but it didn't came below the 80 barrier. It did it. So we have. Oops. You see, let's put it somewhere in the 50. So you see that despite some corrections, okay, it has been seen above the 50 level since yesterday. Done some corrections, but just corrections, and strengthen higher. A bit of a correction here, retested the 80 barrier, but again, appreciation. So as long as we don't see our indicators, such as stochastic, for example, shifting lower, pointing lower, or even drifting below 50, as long as we don't see RSI turning down below 50 as well, or fast moving averages bearishly crossed, then that implies that the positive bias intraday remains positive. So we and this looks a bit okay. It's not overbought, sorry, because you can see the candles within the Bollinger. So if it reached overbought territories, we might see our fast moving averages. This is my 5 and 9 being a bit flattened, like here or here, and they might eventually correct like that. But as long as you don't see that, then it remains to the positive bias. A bit of a correction might be needed. I cannot see this happening right now, but yeah, we might see a bit of a correction, but it seems just as a correction because, as I mentioned, macros and fundamentals support a strong dollar in general. The key support level is the 9670, which for now is our 38.2 Fibonacci level from today's peak. Okay, guys, so 9675. That's the key support. Oh, that's the key support for the asset. As long as it doesn't move below that, then it implies that any dip and with that it will be limited, it will be a correction before another jump to the upside. As I said, fundamentals support the dollar. So yeah, and it's not only due to the Fed. Fed, however, is the key and the main and the most significant driver of dollar. But also because of the geopolitics, the tension with Ukraine and Russia, the tension of China and Taiwan, the tension between that Houthi movement that we have seen to the United Arab Emirates region, where there is a U.S. Base military. All these. Push the investors to the safety of dollar. Okay, so that was in regards to the dollar. Hopefully I managed to cover your questions about dollar. Positive intraday, positive in the medium term as well. You see how big this daily candle is. A bit overbought, we might see a slight correction, but a very, very big but well supported. And if I put my daily setup, so there's a daily setup breaking, reaching March 2020, May 2020, sorry, levels, breaking the high of the year at 97. A bit overbought, but slowly, we can see that. Where's my shift? So it looks overbought in the daily chart, and MACD also hasn't fully turned positive. So we might see a bit of a correction, and as we're moving into the end of the week. However, all the time frames remain positive, as I said. So keep an eye on the 96.90 level that I actually not. Let me just put the Fibonacci back on. 96.75. Okay, and you can amend actually the Fibonacci if we see further extension to the upside in order to identify your immediate support levels. Fibonacci level can easily give you immediate support and resistance levels. Now, okay, before I check the other questions, I would like also to mention that, guys, because of the Fed might powered a betting on dollar, boost on dollar. However, we have seen a big pullback on stocks as well. So let me just mute Skype. And we have seen also a big shift of gold, and that was pretty much something that it shouldn't surprise any one of you, for those that they are gold traders. So if we have why the dollar is strong, because of the yields, the Fed powered and pushed the bond yields higher. Actually, we have seen today we have seen the US 2-year bond yields rocketed to 23 months highs. And that's another reason why the dollar was boosted. So they are correlated. strong a boost on yields, on US Treasury yields, implies to a boost on dollar, implies to a pressure on stocks. That's why we have seen, since actually for more than a week now, but especially yesterday, let me also show you FTSE, Dow, Nasdaq, and etc. So we have seen the asset, even though it posted a bullish. This is S&P 500. Even though it posted a bullish session yesterday, okay, and it's trying as well today to recover. It remains for 5 days in a row below the 200-day moving average, with long down legs, stating that there is a lot of pressure. So in general, we have seen a sell-off in the equity markets in US, in Asia, in Europe. Actually, if I'm not mistaken, the Asia session, the Asia stock markets turned to 2020 lows. But yeah, a sharp decline that it has been since December. An overall negative medium term outlook for the stocks. Okay, why is that? Because traders, investors have turned their attention into the safety of dollar, into treasuries, to the government bonds, because now a rate hike implies that it will give them higher dividends. It will give them so the big investors, the long-term investors, consider that investing in government bonds, now that the US economy is doing good, is growing and growing, and they're gonna have higher interest rates. This implies higher returns if they invest to government bonds. Okay, so investors globally have dumped riskier assets so far, I mean, in January 2022, so far in 2022, and their sought safety as they brace for the end of nearly 2 years of exceptionally cheap and plentiful cash, right? So yeah, always have in mind that if the yields are up, implies to strong dollar. It implies to, actually, we'll say, if the treasury yields are up, implies to pressure on bonds, implies to strong currency, so strong dollar in this case, implies to pressure on stocks. Okay, so a bit of an aggressive selling is what we have seen so far this year for the stocks. Yeah, so I should really move on. Um, what else? So, yeah, I think I covered what I wanted to say. Now it's time to continue with our analysis. We had some earnings news, and earning news, really, some news about the earnings season. We have seen big giants reporting lately. We have seen Tesla yesterday night, right? We have Apple tonight. So I will explain that as well, but let me see your questions first. So yeah, so we have seen dollar index DR future. So let's go to the gold right now. Of course, gold, it was the one that plummeted along with the stocks, and that was logical because it lost its hedging benefits. So what I mean, I will explain right now. So let me find gold. Here it is. Here is gold. Big. This is not a monthly chart. This is a daily chart, and you can see how big these daily candles is. Of course, this has not finished yet. It's not confirmed. It's today's candle. We cannot really make any analysis based on this candle because it hasn't been closed yet. But we have seen how big the body of the candle is. You need to if you're price action traders, you need to pay attention to the tails and the body. Can you see it has actually reversed just in a single, just in 2 days, yesterday and so far today, it has reversed 17 days gains just in 2 days. In 2 days, it managed to return back 17 days, 17 days gains. Now, why? Gold extended these gains since yesterday, and I will put the 1 hour chart on. Bottom, actually, bottom two, actually broken the key psychological level at 1800s. Okay, 1800s is a significant level for gold. Okay, like a significant psychological level, and it just now on the US Open. So why is that? Clearly because the safe haven demand that we used to see on gold, driven by geopolitics, by Ukraine, Russia thing, uh, mainly by geopolitics. Uh, This safe demand has actually countered by the strength of dollar and the treasury yields. So the strong dollar, the boost of treasury yields, since the Fed signaled um, interest rate hike starting in March, um, are responsible for this sell-off that we have seen since yesterday. Um, from the for the gold. So that's nearly 100 let me just measure it. It's 179, 180 nearly pips decline. Sorry, no, I'm not counting correctly. Let me just. So it's a 50, definitely $56 dip. Sorry, yes. So yeah, 544 points decline. So $50 nearly. So why? Because higher yields, higher interest rates tend to appeal of gold by raising the opportunity cost for of holding non-interest paying gold. Okay, so initially, the geopolitics and the increasing geopolitical tension have provided a boost to gold. Okay, they provided the safe haven interest, as we call it, but. Um, uh, but yeah, that changed now with the confirmation of Fed, and now the dollar has been seen as the safe way for the investors to turn into. Of course, geopolitics will remain in play, and it's something that we should really keep an eye on. But from technical perspective, can you see my chart? Yes, you can. So from technical perspective and fundamental perspective, because as we said, the Fed is about to proceed with several interest rate hikes this year, and the U.S. economy is growing, etc. So dollar is expected to remain strong. So because of the strong dollar, gold outlook for the whole year is not good. It's actually neutral to negative. So, from technical perspective, it has already reverted more than 50% of the gains that we have seen the whole year, actually from the December lows. So, now pretty much the next immediate support for the asset is just $10 lower, which is the 61.8 Fibonacci level. And if that breaks, then the doors are pretty open for December lows at 1750 territory. So let me, no, what have I done? I want it to be filled with blue. Okay. to this territory. Um, so if 1790 breaks, and then next support is really the bottom of December, while if I put the weekly chart on, and I extend it further, okay, you need to keep an eye on those floors on the 1750 over here. So if that breaks, then this is the long term, guys. This is the long term view, the medium term view to be more precise, but it's good to have these trend lines on in order to remember every single day that you're checking your charts. Okay, so these are three long, medium term, and long term support levels for the gold. Now, as we shift to the intraday picture, keep extending lower, oversold, so it's outside the Bollingers right now, indicating oversold condition. So we might see a bit of a correction similar to what we have seen here. Have you seen that? It was oversold, needed a bit of a correction. It turned back to the Bollingers before extending further lower. So we might see a bit of a correction over here. You can see that because the body of the candle is outside, that's considered to be an extreme condition, an overbought condition, oversold condition. But okay, the oversold condition can be seen from RSI as well, from stochastic as well, but that doesn't necessarily mean that the bearish pressure has run out of steam. You can see that the fast moving average are keep pointing lower. You can see that your MACD over here is keep expanding lower, extending lower. So it implies that bears, sellers are still there, are still in control. So any correction is just a correction. Okay, the asset is in a high pressure, selling pressure. I still have a financial aspect, not until I friend told me to this person. Okay. Oh, it's a shame that I cannot share your emojis, guys. I love those emojis. What? Why you have this emoji, dear Fuad? Is there anything that you don't understand? Let me know. I will try to be to explain in a simpler way. Okay, Fuad. Now, pound and dollar cut. Okay, let's shift to pound, even though the theme is a strong dollar, so nothing really changed. I will just help you to identify support and resistance levels. So, pound over here managed finally to break that 135 level. So it was like consolidating between the 135 for 3 days in a row, and eventually broke it and turned back and turned actually to one, and it actually entered the 133 territory, currently at 133.84. So as you can see, this used to be a resistance level back in December, which now has broken. Okay, has broken. So you can see this is a daily chart. You can see that the asset had an aggressive sell-off. If I put the daily chart on, let's start with the daily chart. Yeah, aggressive selling, extending below, managed to broken the 50-day moving average. And let me take this bit out. Okay, broken the 50-day moving average. So it will be key to see whether tonight, keep an eye, I mean, put something down, a note to check whether this daily candle, the one that's going to close tonight, will manage to close below or above the 50-day moving average. But in general, the outlook has turned to the downside. MACD eased, to zero, hasn't turned negative yet. So things are a bit neutral right now. So that's why it's key to keep an eye on whether tonight it will close below the 50-day, and of course whether tomorrow, so the whole week, uh, the week we close below that 134 territory. But yeah, the asset is in a sell-off. Okay, that's the 61.8 Fibonacci level as well. So that's why it's key to see how it will close the day or the week tomorrow, whether we'll manage to extend losses. Because if it does below that level, it implies that our next support area is down to 131 and 132 level. So yeah, the technicals do not support a bullish outlook. They support more or less a further decline for cable, but we need to be sure, right? So it's good tonight, guys, to check how the daily candle closed. Okay. Um. So let me zoom out a bit. In general, it was cable has been in a, where's my regression channel? Here it is. Has been to the downside for a long time now. It's been to the downside for since April 2021. Okay, so actually the outlook for cable for pound for the whole year is a bit neutral, because both Bank of England and Fed, they have turned a lot hawkish. They have pretty much some coordinated moves. So that this is something that could keep the cable overall for the year, referring to the year, into neutral. But for the time being, remains into the downtrend since in April, ready to break the 61.8 Fibonacci level. And if it does, then it implies that it could retest the bottom that we've seen back in November. So 131 level, 131.50, but also the bottom of the channel. Okay, so that's a medium term outlook. Now, if we turn down to the 1 hour chart, let me put also my intraday setup. Zoom in. Strong dollar. It is what it is, guys. Don't try to find it. To fight it. Sorry. Fast moving average aggressively. They are pointing aggressively to the downside. MACD extends, something that implies that there is increasing selling pressure. RSI is overbought but flattened, so indicating that it might continue, so that there is further steam to the downside. Stochastic, which is my very short time frame indicator, it has flipped a bit higher. If I zoom in, actually, if I just enlarge it so you can see, but Andria has turned higher. Yeah, but that presents just a correction, just a small correction, like this one, like this one. So can you see this one, this one, this one, this one? So you see, so of course every oversold condition needs a bit of a correction. So stochastic alerts you over here for temporary correction of this big sell-off. Okay, just alerts you. So this is what is going on over here as well. We have a bullish cross, so implying that it might consolidate for a bit, it might try to recover slightly, but it's just a correction, because as long as we don't see the asset, or the stochastic actually, I should say, above 50, okay? And to be more precise, as long as we keep seeing, lower peaks, sorry, I'm trying to have this should be the one. Yeah, see, we've seen some kind of a lower, come on, lower peaks in stochastic. So that goes in line with the price action. So it's another bearish signal. Okay. And dollar CAD. Let's shift to dollar CAD. We have a very strong oil, well supported by the geopolitics, apparently, and this is something that, in contrast with, this is something that supports the Canadian dollar, okay? But because we also have, okay, Canadian dollar is strong because of the boost in oil, but so it's strong against all the other major currencies because of the boost in oil. But if we compare Canadian dollar with US dollar is stronger. That's why we have this boost of dollar CAD to the upside. So Canadian dollar is stronger if you see it against, I don't know, against Aussie CAD decline. So the Canadian dollar is stronger against Aussie. If you see it against Euro, strong Canadian dollar, weak Euro. So it's in general strong against all the majors except dollar, except the US dollar. So Canadian dollar, it might be the second strongest currency, to be honest, because we have a lot of support from the oil prices. But in regards to the US dollar, the US dollar is stronger against Canadian dollar. That's why we have seen this boost. But because we have also support from oil, we might see a limited boost over here. So for the time being, though, okay, retest for a third day in a row, the 50-day moving, the 50 Fibonacci level from the down leg we saw in December. So the 127 level, round number, actually I'm gonna put it with, what color? Let's put it in green. So 127, round number, 50% Fibonacci retracement from the decline that we have seen since December. Okay, so as long as we don't see a breach and break closure above that level, then the outlook, the overall outlook, the medium-term outlook for the dollar CAD remains neutral, because we have seen it consolidating for 1, 2, 3 days in a row. So that's a key resistance area. Okay. Key support area now, we are in the daily chart, it will be the 20-day moving average, guys. Okay. So 126.15, the 20-day moving average as well. So a pullback below 126.15, it could turn the attention into 124 levels. So you need to be a bit, you need to stick these support and resistance levels in your daily chart. Now, in regards to the 1 hour chart, intraday. So pretty confusing, mixed daily outlook so far. So this boost is not coordinated with the technical indicators. You can see that MACD is still negative, even though it has eased a bit. RSI, stochastic flatten, RSI flatten. So the daily outlook for dollar CAD is neutral. That's why you need to put your support and the resistance levels on to keep an eye. Okay. Now, intraday though, it has started turning lower. Can you see that? Can you see this bearish cross of the fast moving averages? So we have seen a big boost higher yesterday, but the asset, let me clear a bit this mess actually. I want to keep having alerts from, okay, from the news. What I wanted to do is like clear a bit this mess. Yeah, so let's focus to the 1 hour chart, okay? So a big boost yesterday, but it's turning lower today. So let's put a fresh. I have keep the daily support and resistance levels, right? The 127 round number and then 126. That's for my daily chart. Now for the intraday 1 hour short-term time frame, we can see that it reverted around 38% of the gains that we have seen yesterday. So it's at a crucial level right now because it sustains a floor over here for 7 hours in a row. 7 hours in a row is pretty much consolidating, failing to break the 126.60 territory. So you need to keep that. You need to turn your attention on that level. It's a key support level intraday. And if that breaks, so if we see actually a candle closing, an hourly candle closing below that, that could open the doors to 126.40 or even 126.25. Okay, so that's your intraday short-term support level. And I'm saying that because, yeah, that, guys, we have also a bearish cross of the fast moving average. That's a bearish signal. Also, another bearish cross from stochastics, another bearish signal. So it is consolidating right now, but that's why we need to keep an eye on whether it will either break to the downside or whether it will continue consolidating or whether it will manage to break the 127. So it is consolidating for now, but you need to keep an eye on these levels because a break of 126.60 open the doors to 126.40, 126.20, and etc. While a breach and break of 127 could extend gains higher, with the next immediate resistance on today's peak at 127.26. Okay, so a break of that level, by the way, will bring into the attention the upper Bollinger Band area and the 127.70 level. So a break of weeks high could retest the 127.70. Dow Jones, of course, even though it's really, they are consolidating. Let me just, here we are, Dow Jones. Okay, so similar to S&P 500, 6 days in a row below the 200-day moving average. We are seeing over here that the 20 and 50-day moving average are ready to bearishly cross. Keep an eye on that tomorrow and maybe on Monday. Keep an eye whether we're gonna have a confirmation for a bearish cross between the 20 and 50-day minimum moving average, because this sign is considered to be a death cross. So it's a sign that the asset has further pressure to the downside. MACD is negative and it keeps extending lower. Okay, stochastic, I will ignore stochastic in the daily chart because this is my fast stochastic, is for the 1 hour chart, for the intraday chart. RSI bottom at 30, but it's flattened a bit. So RSI and in general the price action confirms a bit of a consolidation. Okay, but the fact that we might see some kind of a consolidation, but it looks for now that it's just a correction due to this big sell-off that we have seen, because the fact that the asset is below 200-day moving average, extending lower, posting lower highs and lower lows for 6 days in a row, the fact that MACD turned negative and extending lower, the fact that also RSI, it's at its oversold territory. Everything implies to a negative medium-term outlook for stocks and Dow Jones more precisely. So keep those lines on, my dear Emma. Okay, a breach. The overall outlook remains negative. A break of 33 33,600, or even more precisely a close of the day or of the week below the 33, below the 34 area, 34,000, could further signal, could confirm further decline for Dow Jones if the body closes below 34. Okay, now to the upside, resistance is at 34,800. Okay, is the top that we have this week. If I put also my Fibonacci's, okay, a break of that level, okay, could imply to the retest of 200-day moving average. But as long as we don't have a break and a move above the 200 moving average, the outlook remains negative. Intraday now, it has recovered some of the losses. So let me put the intraday chart on. Perfect. So recovered some losses, broken the latest up fractal, fast moving average are pointing higher, but it looks like a limited move. You could say, but why, Andria? It continues moving higher, blah, blah, blah. Can you see that? MACD is still negative. RSI is at 50 consolidating. Stochastic, it is positive, but it's ready to provide some kind of a bearish cross. If I go to the 30 minutes chart, yeah, let me just, so it's at the 36, 30, is retesting the 61.8 Fibonacci level, but yeah, the indicators do not really support this. There is a mixed momentum over here. That's why I'm saying that this might be a limited move. But what we are seeing over here is a big hourly candle. Okay, big hourly candle breaking that resistance area, the immediate resistance area at 34,224. So if I shift to the 30 minutes chart, so retested, it didn't, it failed, and then finally broken that resistance area. Now is over here. So it seems that intraday, in the very, very short time frame, because I'm a 30 minutes chart, it might, there might be some further upside movement, but it looks a bit limited. Okay, it looks a bit limited because my RSI also over here flatten, so it's a big question mark. Take care if you're considering something like that. Okay, guys. Oh yeah, like Adi said, risk off. It is what it is. Dear, you're losing. Have you had your risk management before entering the market? Have you set Have you considered risk management? Have you set your stop loss, your targets at a reasonable level based on your risk and reward ratio? So, guys, I'm gonna finish with oil, even though no one asked for it. But it might be an excuse to wait a bit until you have any further questions. If you don't, I will call it a day. I will also check whether there is any other news that I might missed. Oh, my Bloomberg TV closed for some reason. Um, so oil well supported by geopolitics. Well supported by geopolitics. A bit of a correction today. Oops, 1 hour. A bit of a correction, sideways movement actually today due to the strong dollar, but the in general the Russian-Ukraine tension. This that implies to supply challenges, the Omicron, also the inventories. Everything looks to support the oil prices. Okay. Um, Yeah, so at 86.90, bridge already, touch already the 87 level, which takes us back to January, beginning of January. So the next resistance at 987.85. So overall, a bullish outlook for oil. uh, anyway, any challenges that oil, any supply challenges that we might see for oil, for energy, is something that supports the oil. So that's why the fear of the Russian invention to Ukraine implies that there will be supply challenges. Don't forget that Russia is one of the biggest exporter producer of oil in the world. Actually, it's not the biggest, but it's one of the big ones. So that's why all this fear support the oil prices. So it is this is what drives the market, along of course with the fact that the inventories have been seen rising. So what else? Let me check your questions, whether there are any. Otherwise, I will call it a date. So, okay, stocks will open in a minute, less than a minute actually. Let's see whether that will make any difference. It did. Okay. So further boost. So this is what we are. We are seeing. Remember, we were seeing USA 30 and USA 500. So it did. It broke. It found some buying pressure on the US Open. Some buying push. It seems that they are set. They have opened higher on the US Open. US Open just open right now, so it opened a bit higher despite the higher yields and higher oil prices. So okay, so whether this will be limited or not, who knows? But in general, as I mentioned, the the high of the week remains key resistance area for the US futures. Okay, so they found some boost. Might be some kind of a buying the dip condition over here, but it looks limited. The technicals are presenting an overall bearish bias. So, guys, any further questions before I call it a date? Okay, one last question with Bruel that just joined us. Cat Yen, of course. So let's finish with yen. No one asked about yen, sorry, in general. So why not yen? One of the most volatile ones. Yen actually is one of the weakest currencies this month. and also CAD is one of the strongest because of oil. So that explains also this rebound. And it's a good thing that you asked me, dear Bruel, because I think it recovered 50%, right? Yeah, it did. So we have a shift of momentum to a bullish one. So it, you see, it retests for 2 days in a row the 20-day moving average. So a closure tonight, my dear Bruel, above the 2-day moving average could imply that the asset, it will get back to where it had been a few days ago. So at 92 highs. So let me just put the daily chart here, rebounded, ready to cross already the 20-day moving average. But if it closed tonight above it, it could open the doors to 92.20 momentum, even though the MACD is a bit close to zero but remains positive. RSI still below 50, so we need to have a confirmation over here. We need to see the stochastic. This is a stochastic. The RSI is above 50, but really close to it. It's at 54. So we need a bit of a further boost in order to confirm the turn of to confirm further boost for dollar, for CAD yen, because in general it's been in a sideways movement since the end of December. But regardless whether we have a trading range or not, remember that a rebound away from the lower barrier of a range implies to a retest to the upper level of the range. So why not? We can still trade in a ranging market, in a consolidating market. So the fact that the asset has rebounded from the lower bottom and has actually so let me just be precise. So it should be over here, that bottom, it should be over here. Actually, we need to have repeatable. So the fact that it rebounded and it also broken the 50%, the midway of this range, implies to potential retest of 92.20, which is the upper level. Okay, so now, and in general, so indeed, yen is the weakest currency and CAD is one of the strongest. Now, let's flip to the 1 hour chart and finish with the 1 hour chart. Broken yesterday's high, extend gains to the upside, Bollinger Bands expanding higher, MACD turned positive, RSI at 66, fast moving averages pointing further to the upside. So there is a lot of bullish bias in this 1 hour chart, CAD yen. So the next levels to be seen, the next resistance areas. So let me just next resistance area, I'm just trying to also try to use my Fibonacci expansion. So to find some immediate sub-resistance areas. So we have managed to find two. So the next resistance area for the asset, 91.30. The very next, 91.57. And the very next one, 91.90. Okay, that's the key resistance areas if the asset continues further to the upside, which it looks likely because everything, technically at least, everything support to a rally, to the extension of a rally. Bollinger's expanding higher, fast moving average pointing higher, MACD turned positive, stochastic is positive, doesn't look to run out of steam. RSI has flattened a bit but remains above 50. So that's it. Anyway, we have a weak yen in general. The same stands for dollar yen, my dear Kinan, sorry. So yen remains one of the weakest currency, if not the weakest currency of all. We have seen a big rally on dollar yen, breaking the 15 level, 115 level just a few hours ago. So pretty much the next resistance areas can be seen based on daily chart. So the next resistance areas, since 115 broken, the November high has been breached. So the next resistance areas is 115.50, so 12 pips higher, okay? And if that breaks, attention is again on the 116 and 116.40 level. So 116 round number, and 116.30, actually 116.35 was the peak that we have seen in the beginning of the year, actually in the end of the of last year on December. So a lot of bullish bias, a lot of boost. It broken the 20-day moving average. Let me add also the 50-day. Okay. Second day in a row above 50-day moving average. Use the exponential one. No. Yeah. What can I say? Okay. Oh, more people will join. Okay. I'm gonna finish with Euro Swiss then. Swiss also losing its safe haven. Mild reactions over here in comparison with the rest of the assets. So remains, however, below the 20-day moving average for more than a week now. So in general, an overall negative outlook for Euro Swiss. Okay, you see MACD never turned positive, slightly in the beginning of January, but the signal line remained negative and now reinforcing this further, reinforcing this negative trajectory. RSI below 54, how long now? Actually, it was a bit of a spike higher just for a few days in January, but it hasn't been above 50 since September. So overall, the outlook is negative. Now, if you're referring to the 1 hour chart, you are seeing, we're seeing over here consolidation, or it looks like a descending triangle. I will say that I can see a lot of indecision, my dear Kwasi. So it's better to wait for some kind of a confirmation or something. I'm not sure what kind of time frame you are trading, but all this. So can you see that the body of the candles is a bit small, but regardless of the bodies, I have for the last 1, 2, 3, 4 hours in a row, we have long tails either to the upside, either to the downside. So that implies to consolidation, to indecision. So it has entered some kind of a consolidation mode, some kind of a consolidation range. So I think you should wait a bit because everything is flattening. MACD flat, RSI, stochastic is flat, RSI is at 50, consolidating for the last 1, 2, 3, 4, 5, 6, 7 hours in a row. So there is a lot of indecision. Keep an eye on the support levels that I have just provided. So here, 10374. So my double fractal. Another one over here, which is a support that has been seen for the whole week, 10367. And I have connected the highs, giving me an upper trend line, which looks like a nice resistance level. On the break of that level, that trend line to the upside, the next resistance area for the asset is at the upper Bollinger. So 1040. Okay. If, however, it turns down, breaks this area, this support area that I have just shown you, then the next levels, the next support levels can be seen down here. So you need to take the previous up and down fractals as your immediate support levels if it breaks that area that I have just provided. Otherwise, it might continue consolidating. So wait until you have a clear picture. So yeah, I covered 1 hour as well. Thank you for clarifying. So in the 1 hour chart is consolidating. Keep an eye on this area, this support area that I have just shown you. This trend line, which is the resistance level. If it breaks to the downside, these are the next support levels. If it breaks the trend line, the 1040 is the next resistance level. But in general, yeah, um, it has been to the downside forever. I mean, this is not something telling you something that it's in a continuous decline. So yeah, the 1 hour chart looks a bit consolidated, neutral. Okay, so that's why you need to keep an eye on the support and resistance levels that I have just told you. Guys, I'm gonna call it a day. I'm a bit tired. Since I don't have any further questions, so I will call it a day. Hopefully, I managed to help you. So what is pretty much expected is that as we move into the weekend, the markets will keep their attention to the Fed. They will keep they keep pricing in what happened this week. So yeah, we're expecting that the dollar will sustain its strength, but don't forget to check the technicals. Don't forget to check the headlines in regards to the geopolitics and anything new. Tomorrow we have a PC, if I'm not mistaken. So always keep yourself up to date with everything, okay? And we're gonna speak again either tomorrow or next week, okay? So thank you very much for attending. Hopefully, I managed to make you understand what's going on and why we are seeing all these moves. And I'll see you again next time. Thank you. Enjoy your day. Take care. Risk management before entering your positions. And see you again later. Bye bye.